What's up? Mortgage Rate Monday. Today is October 10th. Let me share my screen real quick. This is a website called Mortgage News Daily. I like to use this website because it's pretty easy to understand. It really gives you a good idea of trends and patterns and stuff like that. The actual rates really, they're not accurate. They can't possibly be accurate because there's way too many unknowns. But what they do is they do surveys daily and they go to thousands of lenders throughout the country. And for like 30-year fix, for example, they'd say, hey, if someone walked in today, wanted to get a $300,000 loan, they're putting 20% down and they had a 700 credit score, what would you quote them at? And then they take all the averages and that's how they get this number. And they do a similar methodology for each of these top six, the most popular programs out there. There's thousands of loan programs that can't possibly, it'd be impossible, like just scale wise. I mean, maybe not impossible, but very difficult to do. So they just do the top six, and this is how they get all these numbers. So those are not accurate, but what is accurate is these changes. The plus 0.08, plus 0.2. Those are just telling you daily changes in rates. So this is from last Friday because today's Columbus Day, so the markets are closed. But if we look back at historic rates and you look for the patterns here, this is the last 28 days. Do you see more red or do you see more green? Obviously, the answer is more red. So we've been going up or trending up for the last 28 days. Let me go back here. And these are all, like I said, rates are always going to be different. You can't possibly account for everything. Lenders are going to have different agreements. Even individual LOs are going to have different compensation structures. That's all going to play into it. People are going to have different credit scores, different down payments. You can't possibly one size fits all anything. We have luckily 150 or over 150 lenders now to shop through and find rates, and usually we're much better than this. So there's my one shameless plug for the day. But let me stop share here. So anyway, basically what it comes down to is, the economy's still booming. Sports stadiums are still full. Car lots and stores are still struggling to keep inventories. People keep buying stuff. People are still traveling. Businesses are still struggling to find employees. So really, I mean, until there's serious pain, and consumer spending goes way down, and labor force participation goes way up, there's really no reason to expect rates are going to go down because there's nothing to push them that way. So we're just going to completely eliminate that from conversation, at least in the near future. I'd say till the end of the year minimum, probably even first quarter of the next year. So really what I would like to focus on for these videos more of is ways to navigate this market and still put yourself in a good position. So one of the most common right now is a seller buy down, which is basically a seller concession. Seller concession is basically the seller giving you money out of their proceeds at closing to do what you want with. Most of them right now are buying down interest rates. So you have like a 2-1 buy down, which the 2-1 buy down is if par rate for the day, which is the daily interest rate, was 7%. Year number one, you'd pay 5%. Year number two, you'd pay 6%. Year number three, you'd pay 7%. Basically, the seller's paying for your first 2 years' interest. I'm not a huge fan of that. I don't really see a situation where it's better than like a permanent buy down, where same thing except the seller buys down your rate. Usually, it's not quite as big, or quite as big as like the first year, but it doesn't change. Like your payment's going to be the same for the length of the loan, however long you keep it. So I think that's a better strategy. Seller concessions could also be used for down payments. So that's going to depend on the program. Usually there's a limit to seller concessions. It's anywhere from 3 to 9%, depending on how much you put down, what program it is. That's why I said there's never anything that's one size fits all in this mortgage game. Everything's different. So anyway, I just completely lost my train of thought. Seller concession, 3 to 9% is the most they can put down. So let's say you're capped at 3%. The most a seller can give you in the form of a concession at a $300,000 house is $9,000. And you can use that towards buying down the interest rate, or you could use that towards paying for some of your closing costs, or, in some cases, all of your closing costs. The only thing it cannot cover is your down payment. That has to come from you unless you're getting gift funds from someone else, and then that has to come from them, and they got to be sourced and seasoned and all that stuff. Conversation for a different time. But and then some you could also use it for repairs too. Like say the seller doesn't want to make the repair, say okay, give us the credit, we can do it on our own whenever we take possession. So that's that's one way you can win in this market right now. Still, there's a lot of sellers willing to give concessions right now. I know if I have a seller who's struggling to move a house, or if you are a seller struggling to move your house, you would maybe have that conversation like, hey, let's offer a concession and say, hey, we're going to give you, willing to give you up to X number of dollars to the first person that makes an offer in 14 days, or put a time frame on it, obviously. But do a little contest or things like that to help try to move it. The one thing as a seller, be careful with is make sure that your agents are getting compensated based on your net sales price, not the gross sales price. I've been in situations before where we've gotten a pretty good seller concession, and then I see the final closing statement, and we got like the agents got paid off of the gross sales price, because when you give a concession, let's say 300,000 again, it shows the sales price is 300,000, but the seller actually netted, let's say $9,000 less than that. And but so they paid commission off 300, not 291. So they cost their seller, $600, which, when you're talking about numbers that big, may not seem like a lot, but if I came up to you on the street and said, hey, I need to borrow $600, you'd probably punch me in the face. So all of that matters. Just, be fair to your people. And, but anyway, that's it for this week. Again, rates probably not going to go down anytime soon. They may fluctuate. We've seen as much as 0.5% fluctuations in a day. So it's something to keep an eye on. You can maybe catch one low a little bit, but there's also risk that it could go the other way, and you get, you put your borrower in a bad position. So it's a gamble, no matter which way you put it, but there's still ways to navigate it. And I'm going to try to focus more on those in these Monday updates. But thank you guys for watching, and I will see you next week.